All right, what's up, folks? Hope everyone's doing well. Going to break down the QQQ here, which is the ETF for the NASDAQ. I want to talk about kind of this topping pattern that has occurred. I want to talk about what has transpired over the past few days, where we're at currently, and what next expectations could potentially be. So let's talk about the topping pattern first, because I think it's important to have an understanding of how this was very easy to recognize. And as you can see on my chart, there is candles and there is volume at the bottom. Right? That's it. Okay. I have 3 lines drawn here. I'll explain which each of them means to me. But most importantly, I just want to focus on the volume and the price action, because this is where I find most traders miss the most valuable components, okay? Because they are the hardest to understand, right? You can go to TradingView here and there are, I don't know, hundreds, thousands, just thousands of indicators that you can litter your entire chart with, right? But at the end of the day, you're missing the picture if you're focused on 30,000 different things. And more often than not, I find that traders have stuff on their chart that actually serves them no purpose whatsoever at all. So, do I recommend having a reference chart, meaning where you have whatever technicals that you want or whatever indicators you want? Yes. When it comes time to trade, whether it's day trading, swing trading, position trading, you should be looking at the market from a place of clarity, meaning less stuff on the chart. Like, you want it to be as raw as possible, okay? Because at the end of the day, volume and price action are the only things that matter, and all these indicators that you're plotting on your chart are essentially lagging the 2 things that we're going to talk about, and that is volume and price action. So volume, in fact, does kind of precede what price action may very well do next, and that to me is where I have leaned kind of my career on as a trader, after being that trader that bought every indicator and software package and yada yada yada. It really comes down to, do I understand why that indicator or software is printing the way it is? And it ultimately stems back to volume and price action. So those are the 2 key components here, and I emphasize this in every video, and I know it's not a popular kind of topic, because it is in fact the absolute hardest to master. But I do genuinely believe that if you plan to sustain yourself in the trading arena, whether that's day trading, swing trading, position trading, you must have a full in-depth understanding of volume and price action. So let's just take a look kind of at these highs here. If you look at this candle right here, this is a pretty aggressive high we put in here, where if you notice below, we had heavy selling volume come in right there. Okay, so to be expected, we make a new high, a bunch of sellers come in, probably a bunch of orders, sitting there get filled. Now, I want you to notice the next run at that high, okay? And then I want you to look at this candle right here, which failed to close above this wick, right? Or we closed right at it barely. No, we failed to close below it. But look at the volume, okay? So made a run at the high, and we have had nothing but decreasing volume. So what does that tell me? It tells me the buyers pushed price all the way back to the high of this wick, this candle, but were unsuccessful in overcoming it. And if you notice, the volume on the next couple attempts, even though it starts to increase down below here, we don't make any advancements beyond this kind of informal double top here. Just can't. All right. So what does that tell me? That tells me that the buyers are either being absorbed by the sellers, or the buyers have lost interest at the current price. They valued it to be too expensive. Now, whether this is the start of a bear market or just a correction, to me at the moment, that's kind of irrelevant, right? I only care what price is doing in the very near term, because in the very near term, I'm going to look to pay myself, and protect myself. Meaning, take profits, move my stop to my entry, and let the market do whatever it's going to do. Either I'm going to get paid more, or I'm going to get stopped out. Either way, I can live with that because with a great deal of accuracy, I was able to identify that the market was no longer going higher. Right? There was a high probability of some drawback. Again, whether that's a huge turning point in the market that we'll better understand in a few months from now, or if it's just a correction. Okay? So as you can see, I drew one descending trend line on the top here, just identifying that buyers on their attempts here, this is touched 1, 2, 3, 4 times. Buyers were unsuccessful in overcoming that trend line 4 times. Okay? My analysis is extraordinarily basic, guys. I need volume, price action, and I need the ability to draw some trend lines because that's what helps me interpret the bigger picture. Right? This area proved to be resistance over and over and over again as we continue to make lower highs or failed higher highs. Okay? On the way up, we did make some lower highs along the way. Okay, almost forming a somewhat informal wedge pattern kind of up into this area here. And then we have very, very aggressive selling come in. Okay? Notice that we have high selling here on the low, but we don't get any follow through. Right, now, we've had significant earnings come out in the past week or so. Putting the fundamentals aside, markets typically don't go straight up or straight down. They impulse and correct. So to me, this is a topping pattern. Failed to, make new highs. In fact, made lower highs on increased volume. We take a very aggressive impulse, and now we have taken a correction. Okay, so this is a daily chart, 1 day, of the QQQ. Where am I extraordinarily interested to see where and what price action does next? Right here at this white line I have drawn. Okay. If we violate this white line, then we probably come back into the meat of this price action up here. Probably 440, 445, somewhere in that area. And that'll be hard to overcome. But if it does overcome it, then so be it. But what I see that concerns me more is an impulse and a correction to what was previously support could now be newly appointed resistance. If it's newly appointed resistance, then we struggle here. We could violate it, but we struggle here, and then we put in a new lower low somewhere down in this area. Okay, if I had to guess, 405. Okay. So if we fail to overtake this area and then overtake 445, 440, that range, our next impulse to the downside probably takes us roughly to 405, even 400. Right? Now, if this is it, and this was just a bigger, deeper pullback, notice that price stopped at this little gap, this little daily gap here. Okay? It's a tiny little daily gap. So the low of this candle is 414.63. The high of this candle is 413.58. There's a very, very tiny little gap there. And that's where price turned around. Okay? So, is this a correction in a much bigger picture? Or is this an impulse, a correction, and a new impulse is going to come to the downside? In fact, in what is going to be, more than likely, a market correction, right? Whether it's a correction or this is a turning point, those are still kind of yet to be seen. It's an election year. It's very uncommon to see the market take an absolute bath in an election year, but here nor there, nothing's out of, we've learned in the past few years that nothing is out of reach. But I think we're at a key point here of an area that was previously support and could be newly appointed resistance. And if in fact we are due for a further pullback, because this is a very obvious topping pattern, in my humble opinion. Okay, we've only corrected here about 8%, which is not huge, right? It's just what it is. You can see we've taken corrections here. This was kind of a rollover. The last time we really pulled back here, we made kind of lower highs and lower lows for a period of, what was that, July through October, so like three or 4 months. So we may just be in the infancy of this correction transpiring, but I would not be totally surprised if we found resistance either here at somewhere between 30 to 35 or even 40 to 45 if we do come back to retest this. But a very obvious topping pattern based on price action and confirmed by volume. So understanding those two components, how they're wrapped in together, makes all the difference, guys. It doesn't matter if you're day trading, swing trading, or position trading. I trade with my traders live every single day, okay? And the skills that they take from me helping them analyze and interpret the market from a live perspective, they can take that same approach and apply it to a daily chart, a weekly chart, a monthly chart, a 4-hour chart. It doesn't matter. Volume and price action is volume and price action. And if you don't understand them, I don't care what indicator you have or what software you're running or what guru you're following or whatever, right? If you don't understand those two things, you're just taking more risk than you need to. So people ask me all the time, Anthony, what can I do to be a better trader? It's very simple. Study volume and price action, the interaction between the two of them, and you'll be able to start to see whether you're confirming a trade, right? If we get a breakout, we want to break out on high volume. We want to see continuation. Look at, just for instance here, look at this kind of pullback. I want you to notice this candle right here very specifically. All right. What's the volume doing as we pull back? Increasing, right? So we have a pullback in volume, which is normal in a correction. Increase in volume, increase in volume. I am very confident that we've just placed a higher low based on seeing the volume increase. Right? Now here, volume decreased. Why don't I like this? Because price is going up and volume is decreasing. I want to buy when volume is increasing in the favor of the direction that I'm trading. So I would have a great deal of confidence that this could be the higher low that takes the market for the next impulse. Here's the next correction. Okay. Now, is it always going to line up textbook? No. But more often than not, and it doesn't really matter what time frame you're trading on, if you understand that the relationship between volume and price action, and guys, this is very simplistic, right? As I said to you, there's nothing here on my chart other than volume and price action. That's it. But I can see these areas from a very key perspective because I'm just fluent at looking at it. Whether it's a 3-minute chart, a 5-minute chart, or a daily chart, it makes no difference. So, very defined topping pattern here. Right? We almost create kind of this wedge. We have this big pullback here. We have this kind of line in the sand here where price just can't seem to get any higher. Right? This line right here. Price cannot close above that line. On this test, we test it with decreasing volume. Buyers were unable to place a new high. Again, failed. In fact, placed a lower high, and a lower high. Market takes a dump. Okay? So it'll be very interesting to see if the 30 to 35 level or the 40 to 45 level contains any more buying here. And if we do take that next impulse to the downside, I'd be looking at somewhere between 400 to 405 as kind of that next objective as price pushes a little bit lower here. So just food for thought. Again, this video is designed to educate you in the way I approach the market. And the reason I put these videos out and I put them on social media and the reason I share them in my emails is because if you decide that you want to work with me, you should have a kind of an understanding of what my approach to the market is, right? Like I can tell you what my approach is, but showing it to you in a video is brings another level of clarity of what it is I provide, okay? I don't tell you to buy here and sell there. I analyze, interpret, and provide expectations of what I believe the market is doing, has done, and what is likely to do next. What you do with that information is totally up to you. Okay, I'm not a CTA. I'm not here to tell you, how to manage your money or your position sizing. I'm simply here to help you grow along your journey as a trader, because what I needed was somebody to help guide me through understanding volume and price action. And I believe that would have created greater success much faster in my career. So when I decided to help other traders, I decided to help them with what I believed I needed the most that I didn't have any access to. Okay? There's so many people out there that just want to sell you product after product after product after product. I don't care about that. Okay? What I care about is helping you along your journey so that you can go to the next level. And volume and price action is something that took many, many years to have a very deep dive understanding of. And my goal is to help you shorten that learning curve so that it doesn't matter if you're trading stocks, futures, Forex, cryptocurrencies, taking it to the options market, that you can depict what price has done, what it's currently doing, and with the high probability of what it might do next. So if you guys enjoyed this video, I ask you to simply like it. If you haven't subscribed to the channel yet, please do so you don't miss the next video. If you have any questions, feel free to leave them in the comments below. I'd be more than happy to answer them for you. And if you want to learn a little bit more about who I am and what I do, there's also a link below in the description. Feel free to click on it. My email's in there as well, which you're always welcome to reach out to me. So I appreciate your time, guys. Again, I hope this was informational and educational in nature, that you are able to hopefully kind of see through my lens a little bit, and that's ultimately my goal. And I hope you guys have a blessed day, and I look forward to seeing you in the next video.